Good morning, everyone. Today we're looking at Elf Beauty. Elf Beauty. Look at this chart. $61.98, going for a $3.5 billion valuation. Back down to 61 all the way from a peak of $200. Wow, look at that drop. It's pretty much at the same price as it was in 2023. If you haven't heard of Elf Beauty, they are an American cosmetics brand based in Oakland, California. By the way, look at their quarter three earnings. Like, look at these slides. I think they gotta hire a new person that does the PowerPoints, does the slides. But anyways, yeah. So what do they do? Okay, so they're a huge makeup cosmetics brand. So they got a bunch of makeup, bath and skincare products. 3.5 billion, $61. What is going on? Why is the stock selling for so low? Let's check out those fundamentals. All right, here we go. Straight to the quarterlies real quick. Stuff we'll go over. Total revenue, earnings per share, profit margins, and the free cash flow, of course. What is going on? We like to find out what the latest data is for these companies, so I always like to start with quarterly. If it doesn't pass the quarterly, I just skip the stock and I don't go on to the annual or like bother even researching anymore. So if it doesn't pass the quarterly for me, I'm just like pass. There's a lot of companies out there, so you don't have to get stuck with one. Anyways, couple highlights for this company. All right, total revenue. This will be the 24th consecutive quarter of total revenue year-over-year growth. 24 consecutive quarters. That is pretty good. Both sales growth and market share gains. Here's where we're already seeing some problems. First off, I don't like seeing red in my charts. I could already see it in my free cash flow from operations, and also earnings per share. It looks like for the past year, all of 2024, the earnings per share have been dropping year over year. This is not a good sign. This is one of the main numbers that Wall Street looks at, so we want to always see that positive. But 4 consecutive quarters of year-over-year decline, that is not good. What is going on? One of the things they talk about in the transcript was consumption trends in 2025 have been softer than expected. There's been a huge slowdown in the growth of this company. Consumption trends to start the calendar 2025 have been softer than expected. It looks like people aren't buying as much makeup as they used to. And also the new products, the initial reads for a couple of our new product launches for the spring 2025 have started off slower than we expected. Ooh, big red flag. First off, way too many year-over-year declines on earnings per share. Now they are talking about how there is a slowdown in the purchasing power of the consumer, and also the new products that are releasing for the spring of 2025 have already started off to a slower start. I mean, just reading from this, that's already a bad sign coming in. They might have a slowdown in the quarters coming up this year, just by that statement. So, all right, so I don't want to be biased, but on the positive side, we'll do some positive things first. So it looks like they have 5.6 million new members on their rewards app. That is a 20% growth year over year. The downloads for their new mobile Elf app has over 3 million downloads with a 4.9 rating. So that is great. That is great for the company. A couple stores they're currently selling at. Target is one of the biggest ones. They're the number one brand at Target. Look at all that. With over 20% share at the Target store. Number 2 brand in Walmart. And also they have now expanded into Dollar General. They sell at all these: Target, Walmart, Ulta Beauty, Boots. So they are a pretty new company. It's a pretty smaller company. 5 years young. And look how big some of these competitors are. L'Oreal, you have La Roche over here, Cetaphil, Neutrogena. So it's pretty. They are a pretty smaller company. Okay, profit margins are pretty high, 71% profit margins. That is huge. They talk about how gross margins were benefited, primarily driven by favorable foreign exchange impacts on goods purchased from China. Looks like they aren't getting affected with tariffs just yet. They're also having some cost savings and inventory adjustments. Go down to the free cash flow. Ooh, not looking good on free cash flow either. It looks like year-over-year decline for the past year, except for the last quarter, but year-over-year declines on the cash flow. So pretty much for the past year and a half, their fundamentals on the cash flow statement have deteriorated. That is not good. Earnings per share for the past year have gone down. Free cash flow has gone down. That is not good. And also, when you take a look at net income, for the past year, it's been down year over year. So for 2023, they were growing out of nowhere. They've been posting bad fundamentals. Year over year declines for all of 2024. That is not looking good for this company. So my big thing when I see companies share prices falling like this is I want to see some insider buying. I want to see some stock repurchases. Let's check out how much cash they have, if they can even do some share repurchases. So it looks like they only have 70 million in cash with 154 million in long-term debt. So they have double the amount of debt versus the cash they are holding. At these prices right here, I want to see some share buybacks. I want to see some insiders buying shares. And currently right now, if you take a look at insider trading, there's a bunch of insiders selling. No insiders have purchased yet, none. But anyways, yeah, that is just my quick thoughts. $61, $62, $3.5 billion valuation with only 70 million in cash and 150 million in long-term debt. I just can't pull the trigger yet on this company. One more thing, we have Jim Cramer. He's starting to talk about Elf Beauty. Check it out, Mr. Jim Cramer. What did he say? What did he say about Elf Beauty? Elf is a high multiple stock that didn't used to be, and yet it was up today. But Elf is good, other than the chart pattern, which is not that good. So I'd like you to be in the stock. Jim Cramer is saying he would like you to be in the stock. You know what that means, guys? Inverse Cramer. We're about to get an inverse Cramer with Elf. So once I see more positive news, then I would be more interested in this stock. But as of right now, I'm still going to be waiting for a reversal coming out from the company on how they plan to solve this stock crash. Again, they are getting total revenue growth year over year. They're currently expanding internationally right now. So good total revenue, good top line, but earnings per share is bad. Free cash flow per share, bad. Cash flow from operations, bad. And 4 consecutive quarters of negative income, year over year decline. That's not looking good. So let me know what you guys think of this company, because it does look pretty cheap. It does look pretty cheap. But in my head, I think I would want to wait for one of those reversals, or I would like to see some insiders be bullish on their own stock. So anyways, thanks for watching this short video. If you like my videos, guys, please give me a thumbs up. Anyways, thanks for watching. Elf Beauty, $62, $3.5 billion valuation. I don't think the stock has bottomed out yet. A little time, but this is just my thoughts, not financial advice. Thanks for watching. We'll see you on the next one. Peace.